Hi guys, KP this side. Welcome to vlog number 49, Decoding Equity Markets with KP series. And very happy, we have Nifty at all-time high. Thursday, Nifty did its all-time high. Friday, they have set more higher levels. Uh, Another reason for me being happy is that somewhere around, I think, 15th of June itself, no, I think 10th of June, I told you that with the US Federal Reserve not increasing rates on 13th and 14th of June, if that happens, then we might see Nifty at all-time high by end of June itself, which was looking a little difficult because I think we were in the range of 18,500 at that point of time. And this kind of swift upside will come in Nifty with taking Nifty go past 19,100 odd levels was a rare possibility for sure. But very happy that we predicted this and this happened. No magics involved. It was just based on how things were going on at macroeconomic level. I just made a reasonable, you can say, anticipation on this, and it turned out to be correct. Apart from that, I think Team Lee's, my short-term target was done. My target was done for Heg and Rajesh Exports. Short-term targets were done, but again, if you remember, last week I told you in my vlog number 48, I told you this, that Heg and Rajesh Exports, you can re-enter into these two stocks. HDFC Bank, I told you, Bank Nifty, I'm not much confident or I'm not very bullish on Bank Nifty. Rather, I would like to bet my money on Nifty as far as the indices are concerned. But then I told you specifically for HDFC Bank looking good at around 1600 and with a short-term target of 1700, even that was done. Apart from that, I think the stocks which I gave you last week, one was I think Happiest Minds, and the other I think I gave you was HGS, right? The Hinduja Global. Yeah, these two stocks we are still holding, guys. Even I told you Heg and Rajesh Exports you can re-enter. So these stocks which I've recommended are still to do their targets. So we are going to hold them. Okay, it is my responsibility to also speak about stocks which have still not performed. So we don't just like boasting about ourselves that this has done the target, this has done the target in less amount of time and all. Apart from that, Kotak Mahindra Bank also, I still feel Kotak Mahindra Bank is one stock which should be a part of your portfolio. I personally like that stock a lot. So last 1 week not much has happened, but I still tried covering whatever minute details I got about things at macro level. Some advancements are there, some updates are there which I want to share with you, but nothing drastic has happened in last 1 week apart from the fact that we have gone bonkers as far as the Indian indices were concerned, and so did the US equity markets participated in the rally on Friday closing, which was again a good sign. I'll speak about indices with you, but let me first start with my discussion on things at macroeconomy level. Starting with US, guys. Again, Jerome Powell made a statement somewhere on Wednesday or Thursday, I believe, where he said that we are anticipating 2 rate hikes in this year itself. Now they were more specific in when they see this rate hike happening, and they have given July and September as the months in which they will contemplate on increasing the interest rates. What rate hike will be done is still not clear, but I think it has to be 0.25%. 0.5% will be slightly on a higher side, which I think markets are not mentally prepared for. 2 rate hikes, 0.25% each is what we anticipate. Now listen carefully. He also said we cannot rule out the possibility of 2 consecutive rate hikes, one in July, one in August, which means July and September first, he said. Then he said it is even possible, if we want to put more control on inflation, that we might have to go for 2 rate hikes consecutively, one in July, one in August. But the good news is, after he made this statement on Friday, now why did US markets participated in a very good upside rally on Friday is because the price adjusted spending was flat in May month. And inflation also seems to be cooling off a bit more. I think the inflation, which was in the range of 4.9%, has come down to 4%. You get my point what I'm saying? So Friday this data was published that inflation seems to be cooling off because the spending has seen a downtrend. Spending going for a downtrend itself signifies that inflation somewhere will be under control. So this data has resulted in US markets going up on Friday. Understood? But sir, is there any possibility that because this data shows that inflation was cooling off or spending has gone down, is there a possibility of rate hikes not happening at all? The answer is no. Chances are still very high that rate hikes will happen because their targeted inflation, which I told you earlier also, targeted inflation is 2%. We are still at double of that, which is at around 4%. So the inflation has definitely come down a bit, but not anywhere within the targeted zone of 2%. It is much higher than that. Okay, so this is on the US front. As far as China is concerned, there are some trade wars going on between the US and the China. So US has planned putting more restrictions on AI chips, the artificial intelligence chips exports to China. So US has put some restrictions earlier also on chip exports to China. Now they are trying to put more restrictions. They don't want exports of AI related chips to happen to China. Understood? So China also, I read one more thing. China has given its current president more powers that he can make strategies and policies. As far as trade war is concerned, he has been given the liberty to decide on policies to fight any trade wars with the United Nations. Maybe US in specific, but they have given him those powers. So this trade war thing is happening between China and US for long now. But this was the recent development that AI chips will not be exported to China from US, that they are planning to do. Okay. Plus the last stimulus which China has introduced, most of the economists, most of the experts are not very happy with that, because they feel that this small stimulus which they have offered is not offering great help in reviving Chinese economy, and more stimulus packages will be required. Plus we have to accept this, that no matter how many stimulus packages China government introduces, it will take time for Chinese economy to recover. Okay, this is what we understand. So anything very quickly is not going to happen on the Chinese front. And in my last vlogs, I have already explained you why China plays a prominent role in global economic growth. That I have already explained. So, but that, if you look at things from Chinese angle or Chinese economy point of view, things will take time. No matter, because they cannot introduce a very big stimulus also, because the country is having a lot of debt in its hand. Plus country is also having a lot of problems as far as their geopolitical situation is concerned. Some kind of a trade war is always happening. Okay, so because of all those things, the stimulus package size cannot be exorbitant, and that is the reason it will take time for Chinese economy to recover. To add to this existing problems, 24 out of 41 industrial sector companies profits have slumped by as much as 18.8%. You got my point what I said? Out of 41 industrial sectors, 24 have reported a fall in its profit by 18.8% when we consider the data of January to May 2023. Which means at industrial level, things have slowed down for China. Their profitability is getting hit. Their margins are getting dried. Understood? Already, a 20.6% contraction in the industry was anticipated based on data of January to April. 20% contraction means overall size itself was down by 20%. Plus 18% is on top of that, a fall in its profit. So things are not looking very good. Plus, if you look at petroleum and fuel processing industry, there has been a fall of as much as 93% in its profits. 93%. Understood? So why does this data become important? The answer is very simple, because if industrial sector profits are going down, it clearly states that there is a lack of demand. The products are not being consumed in the economy, which means there is a kind of degrowth in the economy. You understand my point? So slowdown is there. Basically, S&P Global, Goldman Sachs, everybody have cut down, based on this news, everybody have cut down their growth anticipation for China for FY 23-24. Okay, so this is about China. Plus, I'll tell you something, guys. Now, China is, the current situation of China is such that they should not be looking at this wild idea, but there are talks and there are theories which suggest that China is having plans of invading Taiwan and this is not something new. Okay, this is not something new. You might not have heard about it, but this is always going on for last 2 years, since the time war is going on between Ukraine and Russia. From that time itself, there are talks going on that China is planning to invade Taiwan. Now, understand one thing: strategically, after China, Taiwan is the second country which is the supplier of semiconductors. Understood? So that is also one reason why India has been looked as a hot spot where they can start producing chips and the semiconductors, because they want some of the market share to move from Taiwan to some other place. Because if you do it like Taiwan minus chip manufacturing, if you make it like that, then China will be less interested in invading Taiwan. Or in other words, if China invades Taiwan, we want other countries to come up as new players in chip manufacturing. You understood my point, what I'm saying? That is the reason why now India is being pushed and India is being encouraged to start chip manufacturing. India is one of those countries. So this is a great opportunity for us. At the same time, we don't want anything like this to happen where China is invading Taiwan, because something happens like this, again there are tensions at macroeconomic level, again geopolitical tensions will come in, again somebody will come to help Taiwan, again at global level things will not start looking good, and you never know, this might cause a fall of 1,000, 1,500, 2,000 points in Nifty. We don't know. I'm saying you don't have to, from this week itself, you don't have to consider this news, factor in this news, because this has been factored in for a long time. I am telling it today to you because I spoke about semiconductor and chips in my last video, so I am interlinking that point with this point. Okay, I read it somewhere. Okay. Now, if you see the overall indices, Nikkei from Japan is the index which has gone up by 2%. Okay, this year. Indian Nifty has gone up by 0.82%, which means if you compare the Indian markets with the Japanese markets, Indian equity markets have still rallied less when compared to Japanese market. But when we compare it with European indices or the US indices, we have done fairly well this year. Okay. Now, what was the reason for Japanese equity markets to do well? There are plenty of reasons for that. One is in the October 2022, Japanese yen depreciated against dollar to its 32 years low of 152, which means Japanese yen per dollar. How much Japanese yen are required for every dollar? For $1, Japanese yen required was 152. Now you know this, for every dollar we need 84, 85 rupees. That ways the Japanese yen against dollar was at its 32 years low of 152. From there the recovery has been great, and right now it is close to 139, 140, which is comparatively better. So Japanese currency has improved over a period of time. Their first quarter, if you see the data of first quarter, their GDP has been close to 2.7%. First quarter of 2023, I am saying, the GDP has been at around 2.7%, whereas as per Reuters, 1.9% was anticipated, and going by the industry sources, 1.6% was expected. So they have done better than expected GDP numbers, and the same has shown some resilience in the equity markets. Apart from that, somewhere in the month of April, Warren Buffett has shown his interest in Japanese entities, and he's very bullish on Japanese companies, about their performance, about their governance. And he showed some interest that he would be willing to invest in some of the companies of Japan. Some of the companies in Japan fall within his criteria of investments, and that is what has brought in attention of other investors as well, that when Warren Buffett is taking interest in Japanese markets, other investors also started taking interest, because of which there was some surge. Understood? So a lot of reasons are there. Like I told you, yen improving against dollar, the GDP numbers being better than expected, Warren Buffett showing his interest in Japanese markets, the kind of deflation kind of a situation is there in Japan, which means deflation is opposite of inflation, which means the demand for goods is less, and prices are actually going down. Still there is no consumption. It's a kind of slowdown in the economy. Inflation shows a kind of too much of consumption in the economy. Deflation shows that the prices are going down because there is no demand at all. Their interest rates were almost negative. Now these things are changing to some extent. So the country is coming out of deflation. The growth is getting registered in the economy. The consumption seems to be better. Understood? Because of all these reasons, Japanese equity markets have performed very well. Now, a very good question over here is, Japan had many years during which they had almost zero growth, and their GDP was almost very low. But now if they can sustain this 2.7, 2.8%, 3% GDP, the question is, for foreign institutional investors, does Japan become a better alternative compared to India? My answer to that, my opinion about that is no. There are two reasons for that. Number one, Japanese markets have already shown a lot of upside in the last couple of months. And as I told you, the Japanese Nikkei is up by 2.02%, whereas Indian Nifty is only up by 0.82%. Plus, the point is, this is too early to comment on whether Japan has come out of deflation. Will they now register some kind of inflation? Will they now have positive interest rates? Will the slowdown completely get over? Will the industry consumption go up? Will the industry production go up? It's too early to say all this. Plus, Japanese yen is very weak. Understand one thing, guys. When you invest money in some country, if you are a chartered accountant, you will understand this better. But otherwise, it's simply, you remember one thing: whenever you invest in some foreign country, equity markets or real estate, wherever you invest, that country's currency, if it depreciates against your currency, it's bad for you. You got my point, what I said? When you're investing in some other country, and if that country's currency depreciates against your currency in future, it's bad for you. So a lot of investors are not willing to put a lot of money in Japanese equity markets. It's not that they are not bullish on the stocks. They might be bullish on the stocks, but they're not very bullish on Japanese yen. So what happens is, if you put money in Japanese indices, and Japanese indices is giving you 20%, 30% return, but during the same time, let's say 20% return Japanese asset class is giving you, but at the same time, yen is depreciating against dollar by 10, 15%. So your return is 20% in equity market minus your loss in currency market, which is 10 to 15%. Only the net you get. Understood? So this is one reason. And rupee has always shown strength against dollar to a large extent, and the kind of depreciation of rupee against dollar is still very, very stable as compared to the fluctuations and volatility you experience in Japanese yen against dollar. Understood? So that is why I feel India is still better poised as far as foreign institutional investor money coming in is concerned. I'll speak more on that part. Okay, so I covered US, China, Japan. European nations, something called as Eurozone, which covers, I think, as many as 27 countries. Their inflation numbers have been pleasantly surprising, because their inflation has been less than anticipated, which is again a good news. Okay, so UK inflation was on a higher side, but Eurozone inflation has been better than expected, which means you can expect some kind of relief in hike of interest rates in the European nations. Okay, now coming to India, what are the big things that happened last week? First is HDFC Limited and HDFC Bank merger has been officially announced. The shareholders of both the companies have given their consent to it, and it will become the second most valued company in India after Reliance, and fourth most valued lender, that is the bank, across the globe. Fourth most valued lender. What do I suggest for HDFC Bank? If you have HDFC Bank, then you should continue holding it till the levels of 2000 minimum. Okay, which means, would I suggest fresh entry? You can do to some extent, but I would suggest that if you already have it, then you should continue holding it up till 2000. Once this merger happens, I think for every 25 shares in HDFC Limited, you will get 42 shares of HDFC Bank, if I understand this correct. This is going to happen somewhere around 15th of July, and from 17th of July, the shares of the merged entity will be listed only as HDFC Bank. Okay, so dates you have to cross check, guys. I don't exactly remember, but once done, HDFC Bank will become the second most valued company in India by going by its market capitalization. Understood? Second, I was reading one report of Goldman Sachs, and Goldman Sachs is very bullish on India. Right now, as far as their operations are concerned, their most human resources are right now, after US, their highest human resources are in India, which is around 8,000 plus employees they have. This year, they are also going to shift their board to India. This happened last in 2012. They keep shifting their board from country to country, but now they feel India is one very vital location for them, and they want to shift their board to India. Plus, Goldman Sachs have also said not just about its operations in India, also overall they are very, very bullish on India as an investment opportunity. If you see, of all the countries, India seems to be the best place right now for investments. Plus, they have also said this, going out of the line, that when they speak to top CEOs across the globe, most of them have shown great positivity for investing in India, that is in Indian equity markets. Okay, the total expense ratio in the mutual funds business, where they do the asset management for the clients, the total expense ratio, which was a part of your portfolio, SEBI wanted to cut it down, because of which a lot of stocks like UTI, Aditya Birla Capital or HDFC AMC, these were under pressure for last 4-5 months. But a couple of days back, a news came. I think Friday only we saw this huge upside in HDFC AMC. A lot of you would have confused it that because of the merger of HDFC twins, this stock was showing upside, but it's not the case. The reason for this is that decision of putting limits on total expense ratio by SEBI has been deferred for now, and they have said we will rethink on this whether we should put this limitation or not. Which means if they would have decided to cut down the total expense ratio as percentage of the portfolio size they are managing, then their profitability would have got hit. But now they have said that they want to decide on this a little later. Understood? So because of that, a lot of stocks from this asset management company sector, they have performed really good on Friday. Next is Indian real estate. If you see, $2.6 billion has been invested in Indian real estate in last 6 months, starting from Jan to June. The numbers have been very robust when you compare it with past. And I told you always, real estate investments going up or real estate industry booming is one very, very clear picture of your economy being healthy and doing well. Understood this? That is why whenever I start talking about China, the first thing I tell you is China real estate, there is a slowdown. Because that is from where, because the moment people have money, the first thing they want to add to their asset class is buying houses. Even commercial properties, because a lot of people will start new businesses, so commercial properties demand will also be high. But if there is a slowdown in the economy, then you will see a good hit on real estate side also. Understood? So $2.6 billion have been invested in Indian real estate in Jan to June period, and again, foreign institutional investors have shown great interest in this particular sector. And comparatively, like I told you, year on years, if you compare with past years, this sector has got a lot of attention in 2023. And my last point here is that GQG, who invested earlier in Adani Group when they were going through a troublesome period, And now this is one investor from Australia, I believe, and they have their operations in multiple countries. They did the third round of investments in GQG now. In Adani Group now, and they have. I think they have targeted the stocks from Adani Green, Adani Enterprise. They invested in this third round. They have invested around $1 billion in Adani Group, and the prime focus was on Adani Green, Adani Enterprise, and I think they also took shares of Adani Transmission of around 1680 crores worth of shares have been purchased. 1680 crores worth of shares. Understood? So Adani Group was also in the limelight on Friday. Plus, Mr. Adani himself has come up and spoken to the press this time, saying that there is a Western interest, there is a conflict of interest, wherein Hindenburg has made its clients short the shares of Adani Group, and at the same time they are doing things just to trouble the company by spreading some news which is a fake news. You understand? Okay. Now, coming to the next point of discussion, that is discussing on the indices. Nifty is at 19,189. Bank Nifty is at 44,747. What do I suggest over here? My suggestion is go a little slow now, because this 600-700 points rally which has happened pretty fast. There has to be a phase in which the gap which was created somewhere in the range of 18,700, 18,800, it has to fill that gap, and markets may become range bound for the time being, somewhere between 18,700, 18,750, on the higher side being 19,250, 19,300. Understood? So I would suggest, again, my suggestion is very same. Go cautious as far as Nifty is concerned. Try to focus more on Nifty as compared to Bank Nifty. This is what I still maintain. You have to be very careful with what stocks you're buying now. You have to see where is it possible to do value investing. You have to see which stocks have still not participated in the rally. You have to see that your overall FNO exposure is very much in control right now. Or you should use some proper hedging techniques. If you're going long on stocks, you have to buy put options. If you're going long on stocks, you have to take short positions on Nifty and Bank Nifty. Some hedging strategies are required. So let markets settle in this range. When markets are continuously going up and up and up, and you have a tendency at that point of time to get carried away and increase your exposure. But I don't personally suggest doing that. Okay, because this is the time when you have to be very cautious. There's one bad news from anywhere across the globe makes market very vulnerable, and you might see a 200, 300, 400 points correction in no time. We don't want to get struck, and these are the levels where you seriously don't want to get struck. You don't want to get struck at these levels, because again what happens is Nifty, Bank Nifty utna nahi tutega, but the stocks which you are going to buy may show you a lot of correction. So sometimes what happens is, now giving you one example, random example I'm giving. Let's say now Maruti is trading at 9,800, which is its 52-week high. Now suddenly you start feeling ab Maruti 11,000 jayega. Okay, if you seriously feel Maruti will go to 11,000, you should have bought it earlier when it was just 3-4 months back. It was trading around 80 to 8,300 levels. But at 9,800 level, why you want to enter into Maruti stock? Because you feel it will go to 11,000. I am personally not in favor of that kind of buying. Not in favor. Understood? So stay away from these technical analysts, because right now they will only talk about breakout on the upper side, because that is what they do all the time. So stay away from them. Listen less to these kind of people. Apply your brains. Having 10-15% liquid cash in hand is always good. Or go for delivery based trading right now with that money. Let's take one more lot. Let's take one more position. Don't do that, guys. This is my strong suggestion to all of you. Strong suggestion. Have some control on your trades right now. Put some limits. जितना कर सकते हैं उससे एक या दो ट्रेड कम करिए. Do 1 or 2 trades less. Wait for opportunities. Abhi everything has caught fire. Everything is going up like anything. So this is the time you wait. It's okay. Another 200 points upside if you don't enjoy, we don't mind, but we don't want to get stuck at these levels and then see a fall of another 500-600 points. Am I saying 500-600 points fall is going to come? I am not saying that. I am just saying that we have to play very safe now. I am just saying that you have to control the number of lots that you are taking. I am just saying that you have to hedge yourself properly. Understood my point? Okay. You know this, SGX Nifty has been replaced by Gift Nifty. Gift Nifty Friday closing was some 19,345, which means which was a 54 points addition. So after market hours, now SGX Nifty has been completely made non-functional. So now you will have Gift Nifty, or you can call it as Gifty. I don't know what they are going to ultimately call it, but Gift Nifty sounds a big word, right? SGX Nifty and Gift Nifty. So now this Gift Nifty 19,345 was the closing, which was 54 points higher on Friday because of Nasdaq and Dow Jones being on the higher side, for which I told you the story. Now my suggestion, guys, understand one thing. Nasdaq closing on Friday was 13,787. Dow Jones closing was 34,407. Now I made you cautious in my 2 minutes back when I was discussing Indian indices. Now I'm sharing a good news with you, and listen to this carefully. 3 times it has happened, and 30 times I have told this to you. Dow Jones gray zone was 33,200 to 34,200. This was the gray zone for Dow Jones. I told you this was the indecisive level. What is the decisive level? The decisive level is when Dow Jones is able to cross 34,200, 34,300 mark convincingly and stay there for some time, which for last 3 times Dow Jones has failed to do. Again it goes up to 34,200, 300 range, and again it comes down. But this time it has closed on 34,400. This week is very crucial. If it is able to close above 34,400 for a couple of days more, I personally feel, this is my suggestion, okay? So you got to do your groundwork properly before you listen to my advice, okay? But if you go by my advice, if a couple of days we see convincing closing on Dow Jones, you might see Dow Jones heading towards 35,300, 35,500 levels very soon. Not over a period of time, very soon. अगले 15 दिन में कहानी हो जाएगा ये सब. If Dow Jones, I'm repeating it one more time, if Dow Jones is able to sustain above 34,300, 400 levels for a couple of days more, you might see Dow Jones will be heading towards 35,300 and 500 levels in a very short span of time. And if that happens, then Nifty will close above 19,500. That I am sure. If that happens, then Nifty will be heading towards 19,500 levels. Yes, then it is good for us, right? But again, I'm saying, better is, I don't know anything. Nobody knows anything. बुद्धिमानी क्या है? फंडामेंटली होना क्या चाहिए मार्केट में? जो होना चाहिए वो मैंने आपको क्लियर कर दिया. Idea is, markets are heated up, markets are going up, crazy, bonkers. थोड़ा दिन के लिए आप शांत हो जाइए. जब मार्केट बहुत तेज होता है ना, आप शांत हो जाइए. जब मार्केट बहुत नीचे जाता है, आप एक्शन में आ जाइए. बट यू ऑलवेज डू उल्टा, करेक्ट? ऊपर जाने वाला मार्केट में वी वांट टू बाय, नीचे आने वाले मार्केट में वी वांट टू सेल एवरीथिंग. That's the opposite of what you got to do. When markets are not showing any action, then you have to get into action. And when markets are showing a lot of action, you sit quietly and watch that action, right? So please have a lot of discipline, and please, as a caution, I'm saying, without any disrespect to anyone, stay away from technical analysis for few of these coming weeks. Why I'm saying that is because abhi unko charts pe everything will be showing to them as a breakout, a fresh breakout. All resistance levels have been broken. So buy. Don't listen to them. Okay, this is my humble advice to you. My 2 stock suggestions. The first one is Varun Beverages. The company is involved in bottling, packaging. Especially their biggest client is PepsiCo. They also do packaging, I think, for Kurkure and other snacks items. The stock is currently trading at around 802. Its 52-week high is 874, but stock recently went for a split from face value of 10 to 5. At that time, I think the stock was trading around 1,600 odd rupees. The company has a high price to book value of 14 times, but I am still suggesting this stock to you because I told you some companies enjoy a premium value because of the kind of businesses it is into. So this company is a multinational company having operations globally. The kind of business they are doing is more of a monopoly kind of a business where they don't have much competition from outside, and that is why the stock is trading at a premium value. You understood my point? Plus, again, if I have some solid information with me which will justify why buying this stock is being suggested to you. From last 5 years data, if I see, their revenue has gone up from 5,100 crores to 13,173 crores, which means almost 2.5 times the revenue has grown. The profits have gone up from 300 crores to 1,550 crores, which means the profits have almost grown by 5 times, which means their profit margins have also grown a lot. Okay. Their return on equity, which used to be in the range of 14 to 17%, last year, 2022 data, if I see, they registered a return on equity of close to 30%, guys. 30%, 30. That's humongous. That's hefty. That's very good. Equity shareholders are very happy if you give them something like this. Now, promoter is holding close to 64%, all unpledged. No, nothing has been pledged. FII is holding 26%, which means 90% of this company is being held by promoters and FII. That's beautiful. DII is holding close to 3.67%. Public is holding only 6.4%. You have got very little to play with. And when you have very little to play with, is the shares which perform very good. Varun Beverages, buy at 802, first target 875, but I suggest if it goes to 875, don't sell at 875. It will then set new records of 925, 930. So if you have a short-term vision, generally you see, if you go by the trends, my first targets are always done and then the stocks come down. I'm not praising myself, but that's how it happens. And if you see all my latest videos, this is exactly what is happening. Whether you see HEG, whether you see Rajesh Exports, whether you see Deepak Nitrite, these are the kind of stocks where the stocks have done their first target and then they have come down. So why regret? If it goes to 875, just sell and book profits. But I strongly feel if it goes above 875, it will then go for next zone of 930, 935, and then it will eventually go past 1000 also, is what I feel. So either you can also do 50% shares rakh lijiyega, 50% में profits book कर लीजिएगा. Understood? Next is Adani Transmission. I gave this stock earlier also, but I am reiterating my buy on Adani Transmission because of GQG investment of around 1700 crores in this company. I personally feel there is nothing to lose in this stock, even though Adani Group has been under pressure because of some kind of regulatory and compliance activities being done. But I still feel this is a safe stock. But you only buy, if you're very, very risk averse, don't buy Adani Transmission, guys, because tomorrow something again negative comes and the stock goes down by around 5%. But for somebody who is willing to take risk but is looking at doubling their returns or doubling the capital, I think Adani Transmission looks very promising to me. The company is involved in power generation and distribution business. I told earlier also about it. 4236 is its all-time high, which obviously was not justified value for this year, but surely 767 is. Buy the stock at 767, and now that you take the risk of buying the stock at 767, which is looking a little risky, a little volatile stock, I would suggest don't sell it before 1000. Don't sell it before 1000 levels are touched. Keep it. It may take 3 months, 4 months, 6 months, I don't know, but you buy the stock. It's a good stock. Buy at around 767. I will remember, if it further falls, I will tell you the right time to average it also. I take that onus and responsibility, guys. But you buy the stock. Its face value is 10, EPS is around 11. Revenue and profits have grown good. They have almost doubled in last 5 years. So I don't see anything wrong with this stock having corrected so much. At 767, you buy Adani Transmission with a target of around 1000 rupees. That's it from my side, guys. This is KP signing off. Stay healthy, stay safe, stay bullish, but be cautious for next 1 or 2 weeks. I will try making a video next week again, but during this time, you have to exercise some level of caution in the markets. Don't take over exposure. नीचे के levels पे buying करने का बहुत opportunity मिलेगा, but at higher levels, we don't want to get stuck. That is why I'm saying exercise some caution. Okay? Chalo, bye-bye. God bless all of you. Thank you. Cheers.